economic observers have faulted the government on its move to scrap the tax relief measures introduced to cushion households from the effects of the COVID-19 pandemic. Experts say reversing the reliefs will leave individual taxpayers with little or no income and make it hard for companies to sustain operations. Dennis Otieno reports.
With the coronavirus pandemic still ravaging economies, the decision by the National Assembly to endorse proposals by the National Treasury withdrawing tax reliefs for Kenyans is likely to expose many households. As the clock strikes midnight tonight, tax experts are warning that many Kenyans will be inflicted as the economy is yet to flatten the curve.
We are now living in times where it is officially a situation where the economy is precarious economy.
The measures introduced on 25th April this year included lowering corporate tax rate from 30% to 25%. A similar reduction was imposed on individual income tax rate. The value-added tax rate was slashed from 16% to 14%. With the measures now all but gone, only Kenyans earning less than 24,000 shillings will maintain the 100% tax relief. The move is despite the fact that a number of corporate bodies rationalized salaries for employees during the period to cope with the tough times. Some of these measures are still in place.
Nonetheless, you realize that a lot of our taxes are indirect taxes. Take, for instance, the VATs of this world. So going back to those high VAT rates in such a difficult situation where people are not sure about how they will finance education, how will they finance their healthcare and so forth. It means that a lot more of the low-income earners will face a lot more stress from this situation.
The Central Organization of Trade Unions, COTU, has termed the move insensitive as many workers are still out of employment. In a statement, COTU says nearly 80% of salaried workers in Kenya earn less than 50,000 shillings, and the focus for many will be on schools reopening. Despite the uproar, the National Treasury described the reliefs as temporary and lamented they were taking a toll on the economy and government planning at large. Early this month, Treasury boss Ukur Yatani stated the government had lost up to 65 billion shillings in revenues since effecting the lower tax rates 8 months ago.
We really have to re-engineer or reconstruct how we are viewing the economy in the next 2 years, because this situation could even get worse if we don't directly look at these issues of debt and how to get ourselves out of it.
Indications of a bleak future are also evident in this month's inflation, which rose from 5.3% in November to 5.6%. The Kenya National Bureau of Statistics attributing the increase to a rise in cost of basic food items, fuel and transport. Costs that are likely to continue into the new year as value-added tax rate inches back to 16%. The National Treasury may have found itself between a rock and a hard place on whether to end the tax relief measures as planned or continue cushioning the taxpayer from the impact of the COVID-19 pandemic. Dennis Otieno, Citizen TV.